Hey, everybody. Hope you are doing well. We had a really action-packed week, very crazy week in the markets this week, as well as news headlines as Russia and Ukraine and that situation has evolved since the past video I did. But gonna have a lot of information today. I'm trying to keep it as short as possible as well. But for the week, December 22, corn was down 18 cents, and November 22, soybeans ended up being down 50 cents. To start with soybeans, we closed the week at $14.13. We made it as high as $15.55 early Thursday morning. We had a huge spike high, and then obviously we sold off quite a bit. We had a historical volatile week. We traded in a $1.52 range from Thursday early morning till close on Friday, which is is just incredible. The first peak has formed in strength and momentum indicators. So over the next 5 to 10 trading days, it will you will really find out where we're going to move in the short term. We really need to recover from here to avoid putting in some negative short-term trends. The first step would be to reclaim the 20-day moving average and the 9-day moving average. We closed under both of those, but we still are above the 50-day moving average, which is a good support level. Through last Tuesday, Managed Money was long 180,000 contracts. They added 4,000 from the prior week, but obviously after Tuesday, they most likely dumped a lot of contracts to end the week. We need to keep expecting highly volatile markets and large swings until the war conditions slow down and actually stop. In regards to corn, we closed the week at 579. We did score a new high as well early Thursday morning at 646. But we had a pretty ugly candle as well on this chart after the large sell offs on Thursday and Friday. We also set initial peaks in the strength and momentum indicators, but if we can recapture the 9-day and the 20-day moving average, which are at 597 and 587, that would help reduce the weakness in the short term and potentially, we could easily retest those highs just in this volatile of a market with all the warlike conditions going on. Through last Tuesday, spec funds were net long 354,000 contracts. They added 29,000 through that date, but Thursday and Friday they sold off a lot of contracts. So keep expecting volatility, and I'm going to say it again. What is your marketing plan? Do you know what price you need to sell your commodities at the elevator? Do you have any orders in at certain levels? If you need help figuring these levels out, please call us. We'll be more than happy to help you out and make an introduction to Heritage Hedge as well. In regards to general updates, so what basically happened this week is on Monday, President Putin from Russia sent troops into Western Ukraine, and that sent grain and energy prices soaring high. Oil made it above $100 a barrel actually this week as well. The reason Russia wants control of Ukraine is because they have the most fertile soil in Europe and a lot of precious metals and minerals that they mine. Two of the biggest precious metals that for the green revolution that's going on is palladium and platinum, and those reacted very nicely to start the week as Ukraine and Russia have the biggest supply in the world of those two metals. China also could be invading Taiwan soon. There's rumors of that, which that would cause a lot of logistical problems as well in the South China Sea. The thing that really made the prices jump is traders that were short had to short cover their contracts. They had to buy them back. And so that sparked a huge rally in prices because They do not want to be short in this type of market, in a war-like condition market. There's a lot of unknown, and they do not want to be short uh, commodities or tangible assets. So that's what really sent prices higher early in the week. On Thursday, the Biden administration announced weaker than expected sanctions on Russia, which was seen as very bearish for commodities and energy prices. Equities, the stock market did recover nicely to end the week. But essentially, you know, the administration did not sanction Russian exports, and that really sent commodities and energy prices lower. With the administration really not encouraging energy independence anymore for America, that probably had an effect on sanctions as well, because we rely on importing 600,000 barrels of oil per day from Russia. And so that is most likely why the sanctions were not as hard as people expected. Moving on to crop insurance. So we have one more day of the price discovery period for the spring price. So far, corn is at $5.89. Soybeans are at $14.32. So compared to last year, corn revenue guarantee per bushel is up 29%, and soybeans are up 22% compared to last year. Again, crop insurance is the only input cost on your farm that guarantees you revenue per acre. So not only this year we're experiencing high input costs, that helps you hedge against that, but also in this type of volatile market we're seeing right now, these revenue guarantees will give you peace of mind, just in case if in the fall for some reason we were to see a huge sell off in commodities. Your spring price revenue guarantees are very high per acre. They're most likely at profitable levels per bushel. So that will help a lot in easing your peace of mind moving forward throughout the growing season. March 2nd, we have our spring update meeting in Buckley. That is this upcoming Wednesday. So would really like to see everybody there if you can make it. And finally, we're ready to complete your crop insurance applications for this year. If you want to make any changes, if you want to work with us in Buckley, we'd be more than happy to go over coverages with you and try to help you out as much as possible. But we want to get that taken care of for 2022. The deadline is March 15th. Other than that, we want to thank you for your business. If you have any questions or comments or concerns, please call us. We'd be more than happy to help you out. Have a great weekend.